A full-time CFO will cost you at least $250,000 a year before benefits, before PTO, before retirement. So a full-time CFO is an expensive hire. Now, there is a time and a place when that is a warranted position, but most business owners will not get to a size in which they need a full-time in-house CFO. And that's where a fractional CFO really can help you bridge that time span. Hey everyone, welcome to today's episode of Pivot to Profit. Today we're going to talk about why all growing and scaling businesses can benefit from having a fractional CFO. We're going to dive into what it is, how it can benefit you, and the results that you can expect to receive by having a CFO. So let's dive right in. First, let me explain my story as a CFO. So my background, I do have an MBA, and I worked for a large construction company, multiple millions, 99 employees. And that company grew rapidly, scaled a lot, but unfortunately ended in bankruptcy. And so as the company was going down, I had to go get a job. And so I did a job interview because I had bills, right? And I had to get a job. And so I did a job interview, and sitting across the table from me was the business owner and someone else. And the someone else was the fractional CFO for this particular business. And I was so confused. And ultimately, I stopped interviewing for the job and started interviewing the fractional CFO. Left knowing there was no way in this world I was going to get that job, but left with the card of the fractional CFO. We then had a coffee a week later, and I learned what a fractional CFO was. And I decided that is how I'm going to change the lives of entrepreneurs and founders, is by being a fractional CFO. So once the company that I was working for officially was closed, I started Pivot Business Group as a fractional CFO firm. So let me define what that is. A CFO is a chief financial officer. This is the top tier financial strategist within a business. In large corporations, this is the C-suite. This is the head of the financial arm. They take care of the bookkeeping, oversee the tax strategy and the tax filing. They oversee the month-end close, the bookkeeper, the controller. So let me define roles right here, because a lot of times people come to us at Pivot Business Group and they say, oh, I need a controller. But really what they're talking about is a bookkeeper. Or they say, oh, I need an accountant. But what they really mean is a CFO. So let me give you some definitions here. A bookkeeper is a talented number ninja that sits and codes all the money in, all the money out, and at the end of the month reconciles, which is essentially balancing your checkbook. They say that $10,000 came in. This is who it came in from. This is what they bought. This is the service or product. And they code it to that item. This is $10 that went out. This is who the vendor was. This is what it was. It was, I don't know, meals. And they're off to the races. And at the end of the month, they reconcile. This is saying, this is the bank said X, the accounting software QuickBooks says X, everybody matches, we are good to go. This is a vital role in every business. And if you are just starting out as an entrepreneur, you need a bookkeeper yesterday, because bookkeepers will save you, because you have to know where your numbers are. Bookkeepers are fabulous. I have an entire team of bookkeepers on my team. They are all number ninjas. They are all QuickBooks certified. They can do 3 years worth of bookkeeping in 6 weeks. They are fantastic. They are vital to the lifeblood of your business. However, they're telling you what happened in your numbers. They are not bringing a forward-looking view. So that is a bookkeeper. Let's step up to a controller. A controller is for companies who are larger, who have a bookkeeper, but maybe also have an accounts payable person or an accounts receivable person. And the controller essentially manages the rear view looking view of the company's financials. So they make sure that the bills get paid on time. They make sure that the clients pay on time. They make sure that the bookkeepers are doing what they're supposed to. A controller is super helpful. They can also prepare your month-end reports and give you detailed reporting of what's happened. They can say, here's your balance statement, here's your P&L, here's your statement of cash flows. Controllers are huge and helpful as you scale your business, but the limitation is a controller is still giving you that rear view mirror of your business. Imagine you're driving your business. You're the entrepreneur, you're the founder, you're in the driver's seat. The bookkeeper and controller are in the back seat. They're telling you where you've been. A CFO, a chief financial officer, is your co-pilot. They're the one that says, they have the map and they're giving you the forward-looking view. Say, based on where we are, we're in Nebraska and we want to go to Florida. Fantastic. Here's the map. jump on this highway, take this exit, and that's going to get us to where our goal is. The CFO takes the information, the historical data from your numbers, and tells you where you're going. And all of these roles are important. Most businesses that are sub probably 30 million will probably just have a bookkeeper, an AR, AP person, and a CFO. The controller role really is for the larger businesses when there's a large internal bookkeeping staff that needs to be done. A fractional CFO comes in and spans the gap from when you're doing $700,000 in revenue to upwards of 25 million in revenue. Our biggest client is $120 million and that we provide fractional CFO services for. But we also had a $20 million client that when they progressed to 25 million, we phased ourselves out and phased a full-time CFO in. So the numbers of revenue that I'm giving here are really benchmarks, but most of the clients that we work with that have fractional CFOs are doing between 1 and 5 million in annual revenue because there's a lot going on. Because a CFO brings that forward-looking view, and a fractional CFO saves you a ton of money because little scary numbers here, y'all. A full-time CFO that has experience, has certifications, has degrees, will cost you at least $250,000 a year before benefits, before PTO, before retirement, all the incentives, all those things. So a full-time CFO is an expensive hire. Now, there is a time and a place when that is a warranted position, but most business owners will not get to a size in which they need a full-time in-house CFO. And that's where a fractional CFO really can help you bridge that time span, where once you get to about $1 million, you can really kind of fake it with your numbers. And I'm not trying to say this in an insulting way, but anyone that hasn't gotten yet to that $1 million mark, you can pretty much figure out your numbers. You can make decisions on what you've got. And based on some numbers in your gut, you'll be all right because you're using historical data. The CFO brings that forward-looking perspective. They have the expertise. They have the experience and knowledge, industry experience to say, here's what's coming. Here's what your cash flow says. Here's what a budget can do for you. Oh, you want to get outside lending? A CFO can help you negotiate those terms with your banker. We do that all the time. We have a number of clients that, with the help of our team, negotiate better rates with their bank because a CFO understands how to speak that language. And the CFO is your partner in that journey. So when you're working with the CFO, what can you expect? And I've said it multiple times, but it is the forward-looking view of your business. A good fractional CFO has a system or a program that they follow. Far too often, I find CFOs that are just doing everything. The ones that are successful in scaling and have repeatable, successful results with clients have a platform, a program, an agenda, a playbook that they're following. And that's what we do at Pivot Business Group. I have 5 CFOs on my team that are performing for a number of clients, and we have the playbook that we're running. I call it our CFO tools. We have CFO tools that we pull out based on the client that's in front of us. And that's what a good CFO should do, because not every business has the same problem and not every business needs the same things. So some of our clients need profit first. Some of our clients need cash flow. Some of our clients need help with debt refinancing or debt pay down. Some of our clients need help with pricing. Some of our clients need help with team compensation or incentive plans, profitability by location. So the deal is a fractional CFO has multiple tools that they can use to help solve your problems. But it's important to find a professional fractional CFO that isn't just saying, oh yeah, I can do that. Oh yeah, I can do that. But rather says, here's what we address. Here's how we can help you. So for example, at Pivot Business Group, we help our clients with sales, profit, cash flow, and scaling. And this allows us to hone in on what we do and what we do well. And in each one of those 4 categories, we have a list of things that we can help our clients understand: their break-even rate, their burn rate. And even when people come into our sphere, we give them a financial analysis and rate them in those 4 areas. So from the get-go, they know how well they're doing in the areas of profit, sales, cash flow, and scaling. So as our team of CFOs steps in, we know where we can help them. So what does fulfillment in these conversations look like? Depending on the client size and the CFO, it can be anywhere from a once a week conversation to an every other week to a once a month conversation. It depends on the needs of the business. Oftentimes people will come into our firm, they're scaling quickly, they don't know where their money is, and they just need help. And so they'll have much more frequent touch points. But then once we put our dashboards in place, we put our financial reports in place, then they can taper down because they feel more comfortable with where they are. But then, when it's time to exit, then they'll ramp back up because the fractional CFO is there helping them prepare for an exit as well. So the fulfillment depends on the size of the business and their particular needs. Some people, fractional CFOs, go physically to their client's office. Some of them just do it virtually. It just depends. But really what the CFO brings is helps you understand your numbers and grow your profit. Yes, sales are important. Yes, cash flow is important. But if you don't have profit, you don't have money to be able to scale your business. You don't have the money to hire that next person. You don't have the money to invest in that marketing campaign. So that's where the CFO focusing on your profitability helps you live the lifestyle you want as an entrepreneur and have money for taxes, have money for profit. And this is where the CFO can also bring that one-off analysis because you as the owner are amazing at what you do. Most likely you are a baller at sales and you are great at casting vision and you are good at leading the team towards the goal. But getting in the weeds of the numbers and the analysis, most founders and entrepreneurs strongly dislike. I have had clients roll their eyes when we show financials, sneeze, yawn, all the things that are like, I'm completely uninterested in what you're showing me. So it is the fractional CFO's job to do the analysis and bring the important high level data metrics to the business owner, not sheet upon sheet upon sheet of boring analysis that the CFO loves, that the CEO founder would rather ignore. I have had clients that are doing 13 million a year come into our world and tell me he hasn't looked at a P&L in 5 years. And I'm like, okay, well, that's a problem. And then we go through it and help them. So what a CFO does is it helps you know what numbers are important, what you do need to look at, what KPIs, what numbers on the balance sheet, the P&L are important to you, so that you can make those decisions. You can decide, yes, it's time for that next location, or yes, I can hire that person, or maybe I should outsource this, or oh gosh, I had no idea that marketing was costing me so much. Maybe I should cut that down. One big thing that a CFO provides is help with your expenses. A lot of times our clients don't take the time to look at their financials or their Amex statements and those things, and they're overspending and they don't even realize it. And it's typically small amounts, but small amounts everywhere. It's the leaky bucket syndrome where there's lots of places where money is leaving. And that's where a CFO can do an expense audit to help you save 2 to 7%. So looking at expenses is a key area that fractional CFOs are able to do to add immediate ROI to your business. When we do an expense audit, we can, like I said, we can save 2 to 7%, and that goes straight to the bottom line, which can either go into the pocket of the owner, it can go to bonus structures for the team members, it can go towards the next hire. But having someone on your team that understands your goals, understand what's important to you, and looking at your expenses is huge. And we can put hundreds to thousands of dollars back into the bank every month by doing that exercise. Another huge thing that a fractional CFO does is look at your pricing. Typically, 9 out of 10 clients that we work with, they're not charging enough. Across the board, whether they're products or services, they're simply not charging enough. So one of the first exercises that we typically have to do when we come into a client is look at their pricing. And we work with a lot of service providers, and it is amazing how different pricing is. And not just based on region or where you live, but pricing is so different. And people just, sometimes they mark it up, they do a 3 times markup, they add 20%. A lot of times business owners don't account for their time and their costs in their products or service. And then they don't understand their direct costs, they don't understand overhead. And all of that analysis is a lot. But as fractional CFOs, we have tools to help do that analysis with you and for you. So it's not overwhelming to be like, oh gosh, I don't know what I should charge for this thing. Your CFO can help you determine. They can help you understand that $75 is not enough, and here's why. So at a minimum, you need to be charging 92 plus. And they can give you those guidelines to say, hey, this is your parameters. You've got to charge at least this much to make sure that you're profitable. And that's a huge value add that a CFO can bring to the table. We recently did this exercise with a client in the med spa space, and we increased their profitability by 14% in 30 days by doing these two exercises. One, looking at the profitability for all of their services. So we did a huge price increase. And two, doing an expense audit. So we helped them get lean. 14% profitability increase in 1 month is fantastic. We also worked with a hair salon recently who just had her 6-month check-in, and she had amazing results from working with her CFO. She had a huge increase in sales, huge increase in profitability, slashed her overhead, increasing her profits. Her revenue increased by over 25%. Also built smart systems so that she could scale her particular business, and positioned her team and their compensation so that they understand the company's goals, and they're not just punching a clock and getting paid, but they now understand what the benchmarks are and what success looks like. And so they're bought in. So the CFO starts with, here's where you are, what are your goals, and then how do we help you get there? And a CFO journey could be 6 months, it could be 6 years. I have clients that I've worked with for over 5 years that we're having monthly or quarterly conversations with, because we are their trusted advisor. We are the ones helping them translate the numbers, deciding, do I buy this? How do I best handle this financing? Hey, my bank wants this. That's where the CFO really brings value over the long term. We can help when the crisis hits of, oh my gosh, I don't know what's going on, I'm not making any money. But then the CFOs can also really add value when it's time to exit. And we've helped a number of our clients go through valuations, go through due diligence, and ultimately get that big payday of being rewarded for what they've built. And the CFO can help have those negotiations. We've recently had 2 clients just this year that were going to exit, and with the help of a CFO, we increased their profitability so much. Both of them decided not to exit this year, even though they had potential buyers that they were talking to, because the CFO helped them increase their profit so much. They were getting more money into their pocket, so it didn't make sense to sell. And so they're building their teams, and so that they're not in the day-to-day as much, but they're still reaping a huge financial benefit from those business. And that happened to 2 clients where both of them were thinking, we want to exit, but then the CFO did the work, profits went up. Oh gosh, maybe I don't want to sell this thing. Maybe I do want that big paycheck every month coming in, and don't have to work 40, 60, 80 hours a week to run this machine. So let's recap. A fractional CFO is a valuable team player that is bringing the financial analysis to your business. They are taking the information from the bookkeeper and they are translating it to you, the entrepreneur, so that you can make better decisions, so that you can get closer to whatever success and freedom mean to you. A fractional CFO is going to help be the liaison between your tax team, your bookkeeping team, your bank team, your legal team, to help translate to all parties what's important. And a CFO is going to do the analysis that you as the entrepreneur probably don't want to be doing. So they're going to tell you what you need to charge, how we can compensate your team. You want to create a bonus plan? Fantastic. Here's the metrics that each department needs to meet so that you can compensate your team. They can help you prepare for an exit, because a CFO is a valuable partner to be on your side of the table during those negotiations. So that's where a CFO really helps. And people ask, okay, when do you need a CFO? And my question is always yesterday. But typically we suggest that businesses that are doing at least $750,000 in annual revenue, it's time to have a CFO, because at that point, you have enough money coming in and out of your business that you can't just fake it. And you can't rely on a bookkeeper to tell you just what's happened. You need someone to bring that forward-looking view, to be strategic, to bring clarity, and to bring confidence to your numbers so you can see what's happening next. Because if your business is growing rapidly and you're wondering, where's my money? I can't make payroll. I'm getting surprise tax bills. The bank won't let me have the line of credit and you don't know why. Those are all answers that a fractional CFO can help you answer and then fix so that they can help you get from where you are to where you want to be. A fractional CFO removes the guesswork of what's going to happen in the next 30, 60, 90, 2 years of my business. A CFO is going to create that roadmap so you're not caught off guard, so you don't have surprises. So you're prepared to scale. You're prepared for a slow season. We've got a client right now has very, very seasonal business. And so they worked with their CFO to create a plan to stow away cash when it was busy season and they were getting money so that they could ride out their slow season. And they actually have more money in the bank now for this Q4 than they've ever had. And he's only going to have to do 2 layoffs where typically he lays off over 10 people. So super excited to be able to partner with that particular client. And we have success story after success story of entrepreneurs that we've worked with to help them scale with fractional CFO services. At Pivot Business Group, we are here. We have a proven process. And if you are looking for help to know where's my money, how do I increase my profits, that's really where a fractional CFO can bring value to you and your business. So if you would like to explore what this looks like for you, just go to pamjordan.com and schedule a consultation with my team. We would happily help you. And if you're not there yet, just keep continuing to listen to this podcast. Listen to the stories that the entrepreneurs tell. The story of Gina, the hair salon. You can hear her story and what her life was like before having financial clarity and what it is now. Corey and Becky from Genesis, they're clients of ours. We've had a number of our clients on this podcast sharing what life was before and after having financial clarity. And the clarity that comes and the confidence is what helps you sleep at night, is what helps you focus on what's important to you as the entrepreneur and know that the numbers are taken care of. Thank you so much. Hopefully this has been helpful and you have better clarity on what a fractional CFO is, what you can expect from them. Again, if you'd like to contact us, just go to pamjordan.com. And remember, it's not what you make that matters. It is what you keep.